Hey guys, good afternoon. Darel, Daik, Noble Mortgage and Investments here with your weekly mortgage update, and also going to give you some tips for flipping right now. Just wanted to touch base with everybody. Tough week, obviously, emotionally in this country. Very, very happy to see the city of Houston have a mostly peaceful march yesterday. That was really beautiful to watch. I think there was over 60,000 people that attended that. I think they had a few incidents last night, but I don't think those were Houstonians. I think that's coming from outside forces, the ones that got nasty. So I'm glad to see that there was a lot of unity in our city, and I hope that stays the course, because we just got out of quarantine, and you have all these businesses that are just now starting to reopen who have had a very, very tough time. And now they're having to reclose again. A lot of businesses are boarding up just in fear of what may happen. So hopefully the city of Houston remains united, and we can change as a people and make improvements and so forth without turning violent. So very, very happy to be a Houstonian today. Anyway, to the mortgage side, things are continuing to get better. First of all, interest rates are still really, really low. If you have any sort of single-family residence, you need to give us a call, 713-680-8100, and see if it's worth it for you to refinance, because you're talking primary interest rates in the 2s, investment property interest rates in the 3s. I've been doing this for 20 years. I've never seen investment property interest rates that low. So it may be worth it for you to take a look at it. Give us a call if we can help you. If we can't, we'll be honest with you. Hey, it doesn't make sense for you to do that. So it doesn't hurt for you to call. It doesn't cost you anything. So I would definitely look at your investment property refis or your primary residences. Housing is starting to move a little bit. We're starting to see the numbers are still low. The listings are low and the pendings are low, but we're starting to see a little bit of movement in housing right now, which is good. I think a lot of that is attributed to the quarantine slowly starting to unravel. Obviously this week is going to probably put a dent in that, but we're seeing open houses again. We're starting to see investors get a little more busy. So all that is good. All that is good. I think things will slowly start to improve again, hopefully in the next week or so. Hard money on the hard money side, we're busy. We're seeing a lot of investors make offers on properties and getting good deals. Especially, one of the things I always tell people is, when you're buying in transitional neighborhoods, you have to kind of ride that wave. Well, when the music stops in real estate, those transitional neighborhoods typically are the first ones to slow down. So we're starting to see people buying these transitional neighborhoods at deep discounts for what they could have received even 4 months ago, 3-4 months ago. So if you're looking at appreciation gains, I would look at these transitional neighborhoods just for a long-term buy and hold. But we're still lending actively on the hard money side. Again, we're offering 9-month loans now instead of 6-month loans to give you a few extra months to get everything done. All the pricing stays the same. We're still lending on commercial properties. We're still doing a lot of rentals, people building rental portfolios. We had a gentleman yesterday on our virtual network who is buying properties here in Texas. He lives in Virginia. He bought 5 houses sight unseen using Noble Mortgage Joe the Investor program. Very, very interesting to see. He's still not seeing these houses. He did everything remotely. So it's amazing what you can do now. And then finally on the non-QM, the non-QM lenders are continuing also to open up. We're starting to see no income loans come back again. They've lowered the loan to values a little bit, but they have a debt service coverage loan where all they're doing is looking at the rent of the property. As long as it qualifies for debt service, then you can get the loan. It still has a credit score requirement. I think it'll go as low as 680, but the higher the credit score, then the better the loan to value and so forth. So it's great to see the non-QMs come back, because I was a little doubtful that they would come back at all. A lot of times that market, when it dries up pretty quickly. So very, very happy to see that. Again, it's not a loan for everybody. It's more built for investors that maybe can't qualify for the conventional standards when it comes to documenting income, or maybe they have too many properties, but they have some pretty viable options. So if you are an investor, you can't document your tax returns very well, your income very well, or maybe you have too many properties, or maybe you're just now starting off self-employed for the first time, you haven't been in business for enough time to qualify for the conventional standards, then the non-QM lenders could be a good fit for you to get started in the real estate. So today we're also going to talk about some ways to flip properties, some tips that we have for our investors. We deal with a lot of new investors. So first of all, if you're going to be getting into flipping properties, you need to learn to screen these deals quickly, because when you find a deal, it doesn't last very long. Okay, so the first 2 things you need to learn to do is estimate your ARV and estimate the repairs. Okay, these are 2 very important things. If you can figure out those 2 things, you can figure out how much to offer. Okay, so we can help you on the ARV until you're to that point, but estimating the repairs, that's something you're going to have to figure out unless you have a team of contractors who can go out there on a regular basis. So my advice is to just start looking at houses, looking at as many as you can. Find a good contractor, vet them, make sure that they have a good reputation, talk to people they've actually done business with, and have them walk the property with you. The more properties you walk with your contractor and he's estimating, the more you're going to figure out how to estimate what it's going to take to get that house into tip-top shape. So if you can estimate the repairs, estimate the ARV, now you know this is what I need to offer, because now I know what it's going to cost and what it's going to sell for later on. Tip number 2, get qualified and understand financing. Okay, there's more than one way to skin a cat. I'm a hard money lender, obviously, but there's lots of ways to finance a property. So we always recommend you educate yourself on the different ways to finance it and get pre-qualified. That way you know you're able to close. So when you are making offers, the seller knows you're for real. Number 3, in the market that we're in right now, lots of uncertainty. So we always recommend in any market, but especially right now when it's very, very uncertain, that you have multiple exit strategies, okay? Flipping is one, right? What if you can't sell the house? Okay, maybe you can rent it, maybe you can owner finance it. You have to look at all these different options because there's so much uncertainty. We don't know how the market's going to look in 6 months from now by the time the house is finished. So it's good to have multiple exit strategies. Tip number 4 is don't get personally attached. We see this happen so many times, and no matter how many times we tell people this, inevitably it seems to happen more often than not, especially on their first deal. On their first deal, they're like, man, they're treating it like a house they're going to live in. Oh, wouldn't this be cool here? And they're enjoying the creative process of picking out colors and paint schemes and so forth, and that's great. You should enjoy it, but you have to keep in mind that this is a business, so don't get personally attached. And then lastly is pay attention to the market, okay? Real estate is very local, so look at everything in that particular market. How long are houses been on the market? What are they selling at? And you can't just look at a per foot basis. A lot of investors get trapped into, okay, this is what it goes for per foot in this particular market. Well, that's only one thing you need to look at. You need to actually pull these houses that have sold to come up with a value. And you need to look at these pictures and read the descriptions that the realtors have created for you, because if you just look at a per foot basis, you're falling into a trap. Per foot basis is not the only thing you need to look at. It is one of the things you need to look at, but not the only things. But look at that market specifically as much as you can. Study it and get comfortable with it. Again, look at days on market. That's very, very important when you're doing flips. Anyway, those are your 5 tips. Tune in for our next real estate virtual network coming up next week, next Tuesday. We're also going to be doing a webinar with fast track remodeling. So if you don't know how to estimate, we're bringing on a contractor here to help you do that. They actually have a really cool app that they sell that can actually help you estimate the cost of the repair. So they will be on our webinar. You can always email me, and if you have any questions on anything, my email is askdarel, that's ASKDAREL @noblemortgage.com. Those go directly to me. Whether I'm doing the loan for you or you're doing a loan with someone else, I don't care. I'm here to help. Abundance mentality, I'm always available. If I can't help you, I'll try to steer you in the right direction. And please like our Facebook page. If you have any interest in our events coming up, like I said, every week we're doing a virtual network online. We're also doing our webinar coming up. Just go to our website, which is noblemortgage.com, and you look at our events. And if you sign up for our newsletter, you'll be reminded about them automatically. Anyway, thank you guys very much. Everybody have a fantastic day.